The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the day. You're looking at the German DAX and also the FTSE. As you can see, they've had a nice little bounce being oversold, stopping at pretty nice fib numbers, especially in the FTSE, right at the 61% retracement. The DAX is right behind us. Now, we're going to have Tim Boss as our guest today. That's at 9:30, and then tomorrow we're going to have Arch Crawford. And hopefully on Friday, we will either have Stan Harley or Bill Meridian, one of the two. So we're waiting to see which one will see whether they have the time for Friday. So that's what we're watching. Now, we've made a 50% retracement in the S&P. I had several questions. You know that we were short that DAX from, the NASDAQ from last Monday, and we had a nice break. We took 6.5 handles out of that. Actually 650 handles out of that, which was a substantial amount. And then we covered it at 10,900. And part of the reason for that was the fact that the NASDAQ had hit that exact 78% retracement on the daily, and it was oversold, and we've seen that happen, and now it's rallied back to the 50% level. So the only reason I have not instituted a short position today is that the chairman of the Federal Reserve, Mr. Powell, is in there talking, and I found from historical purposes that it's not a good thing to be in the market when he's in there talking, because it's a very jittery time. And not only that, but it becomes a little bit less liquid than it is when he's not speaking, because people like to hear what he has to say. And, of course, that's an important thing when you're watching some of these markets. So let's take a look at some other markets here this morning, one of which we're watching here is the soybeans. I want to bring this up to show you because I think we're getting ready for a pretty severe correction here in the beans. We've already seen part of it, but you'll notice yesterday we made a perfect ABCD pattern up there at the 0.707. Now the difference between the 0.707 and 0.618 is like fly, poop, and pepper, man. There you can't tell the difference because it's so close. It's only a couple pennies away. So that's why this program is made to do the exact numbers, but the actual 61% retracement was 3 cents away from the exact high up there where the ABCD completed. So you've got to determine how you're going to enter this. I use the Fibonacci numbers themselves, especially when you have the pattern lining up at the same time, and you notice it's only up there for a very short period of time. This sets up this ABCD pattern down here at $10 a bushel. That's 17 cents from where we are, folks. And if we get down there, that's going to be an ABCD correction in a bull market, and Gartley said you should be looking to buy those. So we'll watch that as seeing these unfold. Now, I know a lot of people have been watching the gold market, which they should, because we got a lot of things happening in the gold. But I wanted to bring to your attention the fact that we're getting very, very close to this level that we've been waiting for quite some time. That's down near that 850 level. This chart's showing it's a little lower than that at around 830, but I believe it's around 1845 is what we're watching here. This is why we've been bearish, the gold, folks. We've had the big ABCD pattern lined up here for quite some time. You'll notice the lower tops that we've had in August and two of them in September. The last one just this past few days right up at the 78% level at 1982. And now we've broken $100 an ounce here in the last 2 days. And that is a very, very important thing, to pay attention to. There is another one that is extremely important, folks, and I really mean this, and that is this one right here. And we'll get this up here to take a look at it. This is the chart of the daily chart of silver. You'll notice the bottom we made down there at 1190. That was way back on March the 23rd. The market rallied, if you can believe that, 21 cents per ounce, all the way up to $30 an ounce. And now, since the August high, here we are in the middle of September, 6-7 weeks out, we're almost at a 382 retracement at 2296, just a tad under 2300. So I think that is one you really have to pay attention to for several different reasons. The main fact is that it's at a 382 retracement, and we know that those are the things that give you the lowest possible risk when you're entering a trade, especially when you're in a strong trending market like silver is. So we need to watch this one extremely close. You have to risk about 20 cents if, in fact, that's what you're going to be looking at when you're doing these. But unfortunately, what you have to do is you've got to decide how much you're going to risk when you put the trade on. My decision was you're going to have to probably risk, just about 20 cents, which is $1,000. Well, that's not very much when it's swinging $5,000 and $10,000 a day. So that's about as close as you're going to get. We're trading at 23.61 right now in the Christmas silver. So if we can get it down another 60 cents or so, that's where you want to look for. We have everything lined up. Now, I wanted to do something just a tiny bit different today because we have to try to keep this interesting to a lot of you folks. I wanted to bring up the artificial intelligence program here for the natural gas, just to show you what we're looking at here this morning and whether it means anything or not. Here is let's get this up here so we can see it. This is the forecast that we're looking at today for the natural gas. This is a 2-minute chart, and you'll notice here that the natural gas is looking to go up into about 9:30 to 10 o'clock. That's what we call the key time of the day. That's when something should happen where the market would be telling us that, yes, this is the forecast that it's given you, that we should be making some type of a trend change at that time. Now, two things you have to remember here. This thing is so sensitive that you literally have to, take it at its word. In other words, around 9:30, 10 o'clock, that's when you make up your mind in the natural gas. Now, at 9:30, we're going to have Tim Bost on, so I'll be able to post one of the charts, during the time when we have the break, and we'll see if it's following. But it's got to be up there a little after around 9:30 to 10 o'clock. It's got to be up there making a high above $2 because we're at $1.98 now. And we need to be above $2, probably 202, 203. And then it's got to start down. That's the second part of it, because this is all time sensitive, has nothing to do with price. Zero. This is basically a time vibration that catches pictures of what the market's been doing in the past, moves them out into the future, and that's what you're looking at to try to determine whether these work or not. You can do this yourself. It's not hard, but I wanted to show you this because artificial intelligence is coming to us in a big way, folks, and I want to share with you when we come back from the break something that John Jameson brought to my attention today that will affect all of us. And it's not in the news too much, but it is something that's going to be happening that will affect all of our lives, and it's something that we need to pay close attention to. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted a patent process into the room. This was done on September the 21st, 2 years ago, 2018, and now it is ready. If you'll read the highlighted section there, you'll see that it is a artificial intelligence cryptocurrency thing that puts it into your body, and it tells you everything you want to know and how to make changes if it needs to. So this is what's coming, so be careful. When I understand what this stuff means, it absolutely scares me. But boy, oh boy, I mean, it's just where we've come in this short distance of time tells us that we're probably going to be even farther out into the future, into next year. So the way things are changing so fast, it's just really, it's really quite scary. Now, we have a chart here from our friend Rich Anderson that he follows a lot of these different websites and stuff. And one of his favorites happens to be this one here. And what it's doing, it's showing you, this is from a guy named Mark Wilson, and it's basically showing you that the NASDAQ has turned over compared to the S&P with that negative divergence that we had here. Now, that is usually a negative indication. Now, you can see the green line there on that top chart that shows you that the 200-day moving average comes in right about that level that we were watching, which is 10,000 in the NASDAQ. That's what our original what we call profit area would be, where we have a big ABCD down in that area. So I think something is going to be real interesting. Hold on, we've got a question coming in from somebody. Mr. Z is telling us this has already been rolled out in Africa by MasterCard. So I guess it's another thing that we have to be thankful for the Gates Foundation and their philanthropical institutes endeavors. So that's good. That's so far over my head, folks. You know, I just try to keep it simple as possible. What I do is so simple, but like Mark Douglas says, trading is simple, but it's not easy. What you've got to be able to do is to find these spots that you're going to be able to say, yes, this is where I think I might be able to make a profit, and how much do I have to risk to see if I'm right at that point. That's what it boils down to. It's really not any more scary than that. So we're only $40 away from the objective we've been waiting in gold for quite some time. That's at $1,845 an ounce. That's multiple patterns coming together there. It's fib numbers. The silver number is at 22.96. We're 70 cents higher than that right now at 23.60, and I believe we're so close to it. Why is it not going to get there? I mean, that seems to be a magnet that is waiting to pull it down there. So I think that's where you want to be watching it. Remember, this silver exploded up from $11 all the way up, to $30 an ounce when everybody had to have it. And here we are, 15% lower now. We're almost at the 382 and nobody has any interest in it. So, well, somebody does. But these are the ones that really we've been waiting for. And this is what you try to do, is to line up ones that we don't have to risk very much at all. And that's the whole key, to trading. It's not about how much money you make. It's about how much money you don't lose. And that's a key factor because, in sports, one of the biggest things that these football teams have is defense. The games are won on defense, not on offense. Same thing in baseball. In baseball, the old adage is, good pitching will beat good hitting. And that's usually the case, but not all the time. There's an interesting story that someone sent me from the internet going back to World War II. Ted Williams, the great baseball player, the last player to bat 400, was a fighter pilot. I don't know if you knew this, but he was in the Air Force. Actually, he was in the Marines. He was a Navy pilot. And he was the wingman for someone who was really famous, folks. He was the wingman for John Glenn, the astronaut. Can you believe that? And the state senator. That's what he did. He was the wingman for that. And then later on, when Williams was playing back in the majors again, they asked him what team was the best team he ever played with. And he quickly replied, the United States Marines. I thought that was a pretty good quote. Anyway, let's move on here a little bit. First of all, David White did some research on the number of up days versus down days. He posted it into the room. It's far different than what I had said. I had said since the beginning of the stock market trading back in the Buttonwood tree back in 1796 or whatever it was, that there was just as many up days as down days. Folks, that has been in my gray matter for so long, I don't know how to change it. But David has looked at this over the last 20 years, and the numbers certainly don't add up. It's closer to 56 to 45 as a percentage. In other words, 56% more up days than down days in most of them. So do the work yourself. Okay, on second thing, remember Larry Williams said September 22nd had a high probability of being a down day because the other 22 days on September 22nd were down days. Well, yesterday was not a down day. So that cycle is broken. And so it just didn't work. And we'll see. Hold on, we got another question coming in here to the den. And okay, 12 trading days. How many days? Okay, I don't know what it is. I will show you this. It's 22 out of 23 isn't too bad. Here's one that's interesting here because this is an historical one. And a lot of this is so skewed because of the news that we have going on with the election, and that's what election cycles do. But you see from September the 16th to October the 9th has a strong seasonality for the market to back off. Now, there again, you're looking at seasonality, and, I can't trade off seasonalities, folks. I'll look at one day, and if that day gives me a spot where I can trade against it, then I'm going to do it because that's what I understand. I understand what the ratios and what the patterns are doing. I don't understand all this other stuff that they throw at you. And believe me, there's so much stuff out there. I don't know how people keep up with it. I mean, it's just overwhelming. I mean, I get probably 10 or 15 emails a day minimum from people sending me interesting articles and stuff. But, and they are interesting. The problem is, how do I use them in my trading? And the answer is I have to stick with what God gave me, and God gave me the Gartley book and said, study this puppy, and I did. And it gives you some edges, and that's what you're looking at. You're just waiting for these edges, to come to your fruition. By the way, if you remember, I told you about my friends up in Oregon that, were very close to being burned out. Well, by golly, I finally got in touch with them yesterday through their daughter, who's a pharmacist up there in North Lake Tahoe, Nevada, and they are okay. They were able to squeeze out Hardly any damage to the ranch at all. A little smoke damage, but that goes away quickly. And they quickly exited on the little rubber raft going down the Umpqua River in the midst of all those flames. But they made it through, and they were fine. Another wonderful, exciting adventure, as they laugh at and say. They have been up until, when I went to Chicago, of course, Byron Tucker became my best friend. For the first 30 years in California, Dennis and Gene were my closest friends. Dennis is a pharmacist from USC, and he owned a couple pharmacies in California when I was out there, and we remained friends through the years, all these years, and it's been a lot of fun. 877-927-6648. Stay tuned for Tim Bost.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having some technical difficulties, so we'll try to get in touch with Tim just as soon as we possibly can. But I wanted to walk through this trade here that we're watching here in hold just a minute. I'm just being inundated with some things here. Hold on here. All right, we'll wait to see if we can reach Tim in just a bit here. But I wanted to walk through this thing with the trade here, possible trade here for the NASDAQ, for the natural gas. You'll notice here, folks, the key time is coming up right about now. We're 9:30, 9:45. You notice we're making a lower high up in here. Now, the key to this is what the prediction is supposed to be. That means that after 9:30, right about now, the market should start to go down. Now, if it continues to go higher, that poses a problem, because what that means is maybe this is not doing what it's supposed to be doing, because it's only probability based. It's about 67% accurate, but that means that 33% might not be accurate. So the key to this is that because we're looking at such a key time there at 9:30, and you're seeing a lower high in there, so what you'd expect is you're not going to take the high out at 202. That's what we think would usually be happening. Now, this thing would start to work once it gets below 197. So the difference between where we are now at 2 and 197 is 3 points. So if it goes below 197, that's your entry point. And then if it goes back above that, that's where it gets above $2, then that means something's wrong. So that quantifies what your risk is. The risk is $3. And now the profit potential on it could be anywhere from 3 to 7 times what you're risking. So that's why when you're looking at a timing thing and you're not even factoring in any kind of price at all, that's what gives you the edge that you think is going to be an edge. Now, the next one I want to talk about frustrates the bejesus out of me, and let me tell you why. I posted this morning, and I posted last night, I posted 3 weeks ago, 4 weeks ago, 5 weeks ago, this chart on silver. And here it is right now. You'll notice that the 382 comes in at $22.96 per ounce. It's trading at $23.60. That is 70 cents away, which is $3,500. That is not a completed pattern, folks. I've gotten 5 emails this morning talking about the fact that, the pattern is complete in the silver. The pattern is not complete in the silver. You have to wait for, till all the things lined up. Now, I think we have all these things ironed out, and we have Mr. Tim Bost out of Sarasota, Florida on the line now, Financial Cycles Weekly. Tim, how are you doing this morning?
I am excellent, sir. How about yourself?
This is good. We're all ready to go. I've already posted the first chart into the room, so you've got the mic. And just tell me when to change these pictures, and we'll be happy to get started.
I think I've connected my screen share here. Can you see that? Or we got,
okay, yes, you're in control of everything, so go right ahead.
Well, if I'm in control, let's move forward.
Go ahead, Tim.
We are looking today at Mercury retrograde, and this is a phenomenon that most of us in and out of the markets are familiar with. Mercury goes retrograde for about 3 times each year, and for about 3 weeks each time that happens. So it's about 17-18% of our trading days are involved with Mercury retrograde periods, so it's worth taking a look at, and we've examined it closely over the years. Mercury will be in retrograde motion between October 13th and November 3rd this fall, and we're looking at that in anticipation, of course. It's still several weeks out, but I've been doing a little extra research here, and have realized that there are really 4 key points to this Mercury retrograde cycle. It will go retrograde on the 13th of October, and then it stops its retrograde motion, its backwards motion, and begins forward motion again on November 3rd. And so what we've done is looked at the point in the zodiac where it will be when it makes its direct station. And so we're defining that as a pre-direct point. In other words, Mercury will hit a particular point in celestial longitude before it goes retrograde. Then it does its retrograde thing. It stops back at that same point. And then finally, in the process, we've got the retrograde return, which in this case won't happen until November 19th. That is to say, Mercury will go back to the place where it originally turned retrograde. So it's kind of a zigzag pattern there in terms of the cycle, but we really need to look at all 4 points of that. And the reason that I wanted to focus on this today was because that first point, the pre-direct point, is today. And so it seems like a very, very appropriate time to talk about this Mercury retrograde cycle as a whole, as an extended period of time, really impacting things between now and almost the end of November, about a week before Thanksgiving, something like that. So we've got a considerable chunk of time ahead of us that we have to reconcile and work with this. The first thing that I decided to do was to take a look at the dynamics for this Mercury retrograde pre-station here, the pre-direct point that it's hitting today. And as it does this, this will be about an hour after the closing bell, 4:54 p.m. New York time here today. So it won't be happening during the market hours, but we get a very interesting configuration planetarily when we look at this. And we're using the 90-degree dial here, and over on the left you'll see the little red pointer there, and that's pointing to the position of Mercury in this particular projection of the astrological positions that are occurring today. And what we're seeing is that it triggers a very important planetary midpoint between Neptune and Admetos as it does that. And this gives us an indication of kind of the intellectual and emotional climate we're likely to see today and tomorrow around this particular event. When we look this up in the textbooks, it tells us this particular configuration is associated with drugs and narcotics and poisonous substances in general. It's about not being able to breathe, a lack of air, or breathing foul air, as the case may be, and also things freezing up. Systems kind of lock up or lock down, and things don't go as smoothly as we would anticipate. So we need to be aware of that, especially in terms of technology and doing computer backups and things of that sort. This is a good time to pay attention to all the details of that sort of system along the way there. So we have that happening. And hello, are you there?
Tim,
I just lost.
I have a question.
Okay.
Can you hear me, Tim?
Yes. Uh-huh.
Okay. I was in California when Reagan was governor, and he was always involved with, I don't remember the lady's name that was the astrologer, and then he used her even during the 8 years when he was in the administration. And one of the things, Nancy was the one that really was involved with it, but he was really aware of the Mercury retrograde, and that he wouldn't make any deals or sign anything. Is that true? Do you remember that part of it? Because I know you've been doing this.
Certainly part of the mix there. That was Joan Quigley, was the astrologer that worked with him, and I had a chance to have a few conversations with Joan prior to her passing about some international affairs that she was doing research on. But she was a great astrologer, and that advice was well taken, avoiding signing important documents when Mercury's retrograde.
Okay, well, stay with us, folks. We'll be right back with Tim Boss, Financial Cycles Weekly.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direction's daily S&P 500 bull and bear leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Tim Boss, Financial Cycles Weekly. Tim, one of our listeners has asked a question. Who was Jeannie Dixon? She was quite a famous astrologer, too, as I recall.
Yeah, Jeannie Dixon was more of a psychic than an astrologer, and her claim to fame was that she said that she had predicted the assassination of John Kennedy back in 1963. So a little bit earlier than Joan Quigley's work with the Reagans. And Jeannie Dixon, I think, had some knowledge of astrology, but she claimed that her psychic powers were what really let her foresee the future and make outrageous predictions. So, two different people there.
Yeah. Well, one of her predictions was the assassination of President Kennedy. I remember that. Tim, we have a question. You were on about a month ago, and you were talking about these dates that were coming up in October. Is this what we're talking about now with these Mercury retrograde positions coming in?
This is one of them. In fact, we mentioned a particular Mars date that coincides with this Mercury retrograde station on the 13th of October. So there's kind of an overlap. We were talking about some Mars cycles previously, and this is certainly factors into that. So we have an unusual situation right now with overlapping retrograde cycles that puts a lot of stress on the markets and a lot of stress on our ability to interpret them correctly. So it's an interesting situation. But with the Mercury, I'm sorry, go ahead.
No, this is one of the reasons why you're not supposed to sign any documents of any importance during Mercury retrograde times?
Right. Anything that requires a signature needs to be at least double checked and read the fine print, that kind of thing, when Mercury is during this retrograde period. And that applies specifically here to the 13th of October through the 3rd of November in this case. And particularly if there's a lot of money at stake, or it's a particularly a sketchy kind of deal that you're doing, then you definitely want to double check things. And it's better to postpone the signing of important documents until after that Mercury retrograde period.
Okay. Now, when you do a chart for somebody, do you telling people that's some of the things that are important? Because I know you're a very famous astrologer, and you do horary charts and stuff, don't you, for people?
Right. I do horary charts, which are about answering specific questions and concerns, but also natal astrology, looking at the individual, and I particularly work with traders in this regard, because that's the key, the missing link, so to speak, in the trading process. We have to be able to analyze the markets. We have to know our trade setups, but we have to know ourselves as traders. And astrology is a very, very powerful tool for doing that. So we can look at things like the tendency to be taking on too much risk and how to manage yourself as a trader can be very, very informative.
Wow, that's really good. Okay, continue on, my friend.
Okay, well, we're mentioning this lineup today, and we're talking about this as the pre-direct because it is the point that Mercury is hitting today is where it will be when it ends its retrograde cycle on the 3rd of November. And so we're looking at some of the indications connected with that, and generally speaking, it signals a period of decline. But again, this is very, very short term here. So in terms of the S&P, we're looking for a little bit more pressure on the consolidation on the downward swing here. We've seen a bit of a rebound yesterday and at the close on Monday, but we may see a little bit more selling pressure come in before the week is out with regard to that. However, we want to look at things from a broader perspective, and so this is our study here historically of the S&P. And what we've done is gone back over 60 years or so of history with the S&P and looked at all of the Mercury retrograde periods. So we have about 200 examples here to work with that we average out. And in doing so, then we can get a sense of how the market typically behaves during the times with the Mercury retrograde period. And so the 0 point in the middle that we've labeled B is the Mercury retrograde station coming up here in mid-October. To the left of that, about 20 days prior to it, is the point A, which is where we are today. And we're calling that the pre-direct point. So then we go to the retrograde station, and then through that period, when Mercury resumes direct motion at point C, then we end essentially a period of consolidation and choppy trading. It's typically a pretty lateral move that goes on during that period. And then once Mercury resumes direct motion, we expect a resumption of movement to the upside. However, Mercury is still in the shadow, so to speak, until it goes back to the retrograde point at point D, which in this case will be the 19th of November. And then we expect that to be another period of congestion, a slight pullback coming into that. A little uncertainty in the markets as we finish up that longer-term cycle perspective. So what we've done here is try to superimpose the chart that we just looked at on the current price chart for the S&P with the daily bars. And it's a little bit hard to see because we had to fade one out to make it appear there. But you get the idea here that what we're doing now is completing a downward swing that matches that Mercury retrograde dynamic pretty closely there. It actually kicked in a little bit early this time around, but typically we see an upswing going into about 35 days prior to the Mercury retrograde, or 30 days prior to it. But this kicked in a little bit early this time. And then, so we've projected this then forward to say this is what the price projection looks like over the next few weeks based on our back testing, our analysis of this. Now, there are a couple of key points that we would focus on with this. First of all, we've seen that recent area of resistance in the S&P over on the left there, and looks like that's lining up at about the same price level that we can anticipate during that congestion period when the Mercury retrograde is in effect. And we're watching for the trading congestion really from the 1st of October to almost the end of the month there. And we've done a kind of a dotted line circle around that period in terms of our price projections. But based on that recent resistance zone that we just encountered, we anticipate that congestion to hit pretty much in that same territory between 34.24 and 34.29 if that holds true to the previous experience there.
Oh, that's very good, Tim. We're going to have to take a break here pretty soon, but when we come back from the break, a couple things. One quick question is, and we've got three questions the same, what are you seeing as far as the election results? Anything that's showing who has the favorites, which horse is running in the right race, or anything that you see there?
I'm seeing chaos.
Yeah, oh dear, I guess so, for sure.
Well,
But,
we'll chat about, take a break, and we'll chat about that in a little more detail when we get back, because there are some interesting correlations here that we do want to point out with the cycles that we're looking at here and the election forecast as well. But there are different methodologies that we use in forecasting elections, and so this gives us cause to really scratch our heads and take a hard look at those methodologies this time around, because it's not quite a slam dunk situation. Let's put it that way.
Okay, that's great. Stay with us, folks. We've got Tim Boss Financial Cycles Weekly with us. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
If you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. We're talking with Tim Boss, Financial Cycles Weekly out of Sarasota, Florida. Tim, we were talking a little bit about the November 3rd election, and you said it was going to be pretty chaotic. Well, that pretty much describes everything since they started going into the process, I guess. Is there anything that really jumps out at you?
Well, I'm remembering one of the quips by Will Rogers, who once said that he likes dogs because they don't have opinions about politics.
So, that's a good one.
But as we look at this from an astrological perspective, there are lots of astrologers that try to analyze the date of the election and try to figure out what's going on there with the various candidates. Of course, we work with the birth charts of the candidates. What I have found is that the important date here is the date of the inauguration rather than the election day. Because elections can be disputed and up and down and chaotic and whatnot, and we can get surprising results there. But the real question is who's happy on the 20th of January at the time of the inauguration? And that time frame is specified in the Constitution at noon on the 20th of January is the time the person becomes president. And so we can time that pretty well in advance. And so that was one of the techniques I used 4 years ago in looking at the charts for the competitors then. And Donald Trump's chart was absolutely spectacular on Inauguration Day. And it said nothing about the size of the crowd that he could expect, but it did say he was going to be a very happy person that day. And so on that basis, I forecast a kind of a slam dunk victory for Trump, which most other astrologers disagreed with at the time, but it turned out to be pretty accurate. As we look at the charts for Trump and for Biden for the coming Inauguration Day next January, both of them have some stress and some favorability. And it's not quite a slam dunk situation as we've seen in the past. So we need to be a little bit more cautious about that.
Tim, how do they reach you, Tim? Put your commercial in quickly.
Okay, send me an email, tim@timboss.com. Go to bit.ly/feelheat for information on our latest webinar.
Hey, thanks for joining us, buddy. We'll have you on again soon.
Okay, take care.
See you all tomorrow, folks. Arch.